Today is Tuesday, June the 23rd, and NASDAQ, its volume that we've come to expect, and that hit a new record and pulled back, seems to be doing that on a daily basis now, and it's really thanks to Apple. But, other stocks are contributing, but Apple's just been phenomenal. But the Dow had low volume. We're going to look at comparative volume in a second. The McClellan oscillator is what we want to look at. And here's that trend line that we pointed out last week. There's an even deeper trend line that goes all the way back to March. And the bulls are pushing the McClellan oscillator higher. But to say that we're overbought, we're not overbought. We're below the neutral line, and we just escaped being oversold. So this might be one of the times when the McClellan oscillator really is lagging with sentiment, because we're reading more and more about how at the end of June, when pension funds, mutual funds, ETFs start to balance, there's going to be billions of dollars of shares sold to show a profit in the quarterly statements. And there's talk about a lot of that moving over to the bond market. So, keep an eye on that. We're only, we're not far away from it. We're 7 days away. So next week is going to be the end of the month. Let's take a look at some of the other charts. Let me just speed things up here. Here's the volume stacked just a little bit higher than yesterday, but this is low volume. So the market's moving higher, but the volume isn't there. Now, you know that 70-80% of the volume is computer driven. You've got a lot of day traders now who are working from home thanks to COVID, who are recklessly participating in this market, really, and buying at pretty high prices. It's really not a good recipe. The buying and selling number of shares, pretty much identical Monday to Tuesday. And the summation index, we really can't see it very well here, but it has turned down a tiny bit and is now below 4,000. So let's take a look at some charts. And let's make this really quick. The NASDAQ made a new high, but pulled back and finished just at 138.2% of this long wave from January 2009. So that's that's important, that we would breach that level, then pull back. This is a weekly chart, and we stopped exactly at that level. 10-12 is what I've got here on this Fibonacci, but I think that that's important to note. The volatility index continues in this range that I'm going to call the choppy range, because when the volatility is in this area, the market is choppy, not a smooth advance like when the volatility is in the green zone. You see volatility here, and you're certainly seeing it up here. And when we were in this area back here in late 2018, we saw this volatility. So until we break out of this area, and we appear to be heading higher in volatility, that's what to keep an eye on. Now, the S&P still is bound by this deep trend line, which goes all the way back to 2002, 2007, September 2007, 2018, 2018, and then 2019. So that trend line is keeping the S&P down. So we've got now two charts that are topping out at trend lines and fib indicators. Apple continues to rocket higher. This is a daily chart. It did pull back from its high, but it closed at another new high. Home Depot pulled back fairly steeply. This is a weekly. Let's go to the daily. And you can see that on the daily, the stock did actually pull back. And we've got the 138.2 Fibonacci, which is where the stock peaked on June 9th, and now has fallen below this trend line. And this is a trend line that stretches back to January of 18 and has 1, 2, 3, a whole series of hits in it. So that's another interesting trend line. And then we've got Caterpillar, which had a doji day today. All this talk about are we on in Japan, are we off in Japan, that's going to play a factor. Let's look at the banks. The banks had another good day today. At one point, they were up 1.3%. They all finished down anywhere between, flat. JP Morgan was up, I think, about 2% in the day and then pulled back. So let's just take a look at Boeing now and see if because we talked about Boeing last week. And Boeing is still in that area where it's pulling back. If it pulls below the 23.6, or if it gets rejected at the 38.2, if it ever gets that high in the short term, that would be a place to start shorting the stock. So I'm going to keep this short for today. The McClellan oscillator tells us that we're still going higher, but we are heading into the end of June, and that presents a lot of risk in terms of the market has just recovered so steeply, this V pattern. And if you look at the quarter started right back here in April. And we've done all of this recovery from coronavirus since April. There's going to be selling taking place, so keep your positions tight. And if you have short calls on your stocks like I do, that's a good place to be.